Today, we are going to decode some of the key questions arising from SEBI's recently released consultation paper, which seeks to make amendments to the master circulars on ReITs and InvITs. My name is Antara Vasudev, and I'm the founder and CEO of Civis.vote, a non-profit organization that builds dialogue between citizens and governments through public consultations. Joining me today as a moderator from SEC is Aditya Gupta. Aditya is a corporate and competition lawyer and is spearheading the corporate and economic law initiatives at SEC. Our esteemed guests today join us from SEBI. They are Mr. Pawan Chaudhary and Mr. Barun Gurani. Mr. Chaudhary is a chartered accountant and company secretary who has been working at SEBI since the last 11 years. He is presently handling policy matters pertaining to real estate investment trusts, REITs, infrastructure investment trusts, and small and medium REITs. Mr. Gurani is also a chartered accountant working with SEBI and is handling matters pertaining to REITs, InvITs, and SM REITs. Thank you so much for joining us today.
Thank you.
We can now delve into the consultation paper and its questions. To start with, if you could help us by understanding the fundamentals, that would be great. Could you explain to us what is the Real Estate Investment Trust, which is also known as a REIT?
Okay, so good morning, everyone. Barun Gurani this side. So REITs or Real Estate Investment Trusts are basically monetization vehicles. So the structure is similar to a mutual fund. REIT as an entity is established as a trust, similar to mutual fund. It has three major entities. One is the sponsor, one is the manager, and one is the trustee. So sponsor is basically the entity who brings the asset into the REIT and gets units of the REIT and or cash in return. And the REIT simultaneously comes out with the initial offer based on the asset, which it acquires from the sponsor. The manager of the REIT is basically a company, generally a company, who undertakes the day-to-day operational activities of the REIT. It takes the investment decisions and majorly handles the compliance part. Coming to the trustee of the REIT, so trustee, as per the regulations, is required to be a SEBI registered debenture trustee. And a trustee should be an independent entity, meaning to say that it cannot be an associate of the sponsor or the manager. And it acts as an overarching authority, a supervisory body who ensures that all the activities are being conducted in the best interest of the unit holders. So REITs basically invest, they are by law required to invest 80% minimum of their asset in completed and income generating properties. So these properties can be commercial, office spaces, tech parks, malls, they can be residential property also. And the remaining 20%, it can be invested in under construction projects, properties. It can be invested in equity securities, debt securities of companies in real estate sector. It can be invested in GSEC, money market instruments, cash, etc. Presently, we have 4 listed REITs in India. So this was a basic overview of REIT in India.
Thank you so much. Thank you for that. That was a great explanation. We often hear REITs and InvITs being used in the same sentence. So could you perhaps help us decode what is an infrastructure investment trust as well?
Okay, so InvITs or infrastructure investment trust, structure-wise, they are more or less similar to REITs. The distincting points, few I can highlight. One is in InvITs, we have another entity, which is the project manager. So a project manager is basically involved in the execution of the underlying project. And investment wise, if we have to say, so where does an InvIT invest? So an InvIT holds infrastructure projects within it. So infrastructure is as per the harmonized master list of infrastructure, which is as per the Ministry of Finance notification. So to give some examples, it can be toll roads, it can be power transmission, power generation, data centers, warehouses, telecommunication towers. So these are the broad areas in which we have InvITs who are presently listed in India. Then one more distincting feature of an InvIT, which I would like to highlight, is an InvIT can be private also. So what is a private InvIT? A private InvIT was basically designed to cater to sophisticated investors, meaning to say institutional investors and body corporates. So a private InvIT can go 100% into under construction assets also. Like we mentioned the 80-20 rule for REITs, 80% minimum should be completed, only 20% can be in under construction. A private InvIT can go 100% in under construction. So we have certain limitations with respect to who can invest, only institutional investors and body corporates. We have higher investment limits also for private InvIT. We have higher secondary market trading lot for private InvIT. So that small investors, do not invest in InvITs. There are public InvITs also, which are similar to ReITs as such. And in India, we have 19 listed InvITs as of now.
So global, to add on to what Varun said, globally, this REITs are only seen, you don't find an InvIT. It's specific to India especially because they have one structure. But in India, to keep a special focus, we have created another vehicle as InvITs. So the distinguishing is like you see the asset, which assets can come into InvIT. If it doesn't come into InvIT, it will be a REIT as specific.
And that demarcation is as per the harmonized master list of infrastructure released by MoF, which lists down the infrastructure sectors and subsectors. Interesting.
I personally myself didn't know that data center would also come under an InvIT. So that's a great learning for me today. I have one question in terms of who can invest in REITs and InvITs, and is there a minimum amount that can be invested? What is the typical profile of investor in these two initiatives?
Yeah. So before answering this question, I should say like at the time of initial offer, there are two phases like what Varun said, there can be public or private. In case of REIT, it can be only public issue. Whereas in InvIT, it can be public and private both. So now in case of public issues, any kind of investor can be there, Indian or foreign, depending upon the RBI limit, whatever sectoral cap we have on the infrastructure subsectors. And in public issue, any investors can bid into that units when they come out with an initial offer. Whereas and the minimum offer is similar to the equity listed company, whereas we have 10 to 15,000 initial application amount that can be bid, that an investor can bid upon. And post listing, it's traded as one unit. So to say any unit which has 100 rupees or 300 rupees as a 1 unit value, that can be traded at 1 unit. Whereas in a private placement, since they don't have a limit of 80% completed and revenue generating, only the sophisticated investors, institutional investors, and body corporate should participate. So at the time of initial offer, only the institutional investors and body corporate are allowed to participate, and with a higher threshold. So depending upon the investment mix, it's 25 crore or 1 crore. And post listing, even the trading lot is 1 crore or 2 crore, depending upon the investment mix, what type of assets they are holding. Now, recently in last board meeting, SEBI had reduced this trading lot from 1 crore, 2 crore to 25 lakhs. Gazette notification will be issued shortly. So after that, we'll see a reduced lot size of this private listed investors.
Understood. Thank you so much, Mr. Chaudhary, for that. I think one question, as you mentioned, that there is a varied set of investors in both REITs and InvITs. I know that SEBI has been working very consistently at protecting investor interests. So could you perhaps highlight some of the key initiatives that have been undertaken to protect investor interests and ensure that REITs and InvITs are a safe and good mechanism for investment?
Yeah, to safeguard the investors, obviously we have many things inbuilt in our regulation. So periodic disclosure is the most key thing which we envisage, like even in the offer document, and a continuous disclosure on the basis of financial disclosure, the valuation of assets of REIT InvIT. Further, the corporate governance norm which are applicable for equity listed entities that are also made applicable to REITs and InvITs. And then we have like in case of major decision like issuance of new units, incremental borrowings, those things are done only after the unit holder approval. Further, we have skin in the game. Like so, sponsor they have to hold certain amount of units for a perpetual with a gradual reduction. Like initial 3 years, you have to hold 15% of the units. So as to give a comfort to the unit holders, and even they have their skin in that game of the assets which have been monetized through REITs and InvITs. And now recently we have introduced that nomination directors. So any unit holder, whether singly or jointly, they can appoint director, they can nominate a directors on the board of the investment manager if they are holding more than 10% units. So this way we are trying to protect the investors.
Thank you so much, Mr. Chaudhary, for that. I will now like to hand it over to Aditya to ask more specific questions on this most recent amendment.
Thank you, Antara, Mr. Pawan and Barun, for the accurate explanation on the fundamentals. That was very informative. Now that we've understood the nature of these instruments and their functioning, we come to the meat of the matter, which is a consultation paper published on the 9th of July 2024, which discusses the removal of restrictions on the nomination of unitholder nominee directors. Sir, could you throw some light on the concept of nomination of directors by unit holders in the context of ReITs and InvITs?
Okay. So basically, this amendment came in August 2023. So what the regulations envisaged prior to this amendment, they envisage it right now also, is that all the unit holders of a ReIT or InvIT should have same rights, equal rights. No unit holder is allowed to have any superior right over another unit holder. We received representation from the market that when institutional investors come and they invest in units of ReITs and InvITs, they invest a significant amount. And as a investor who is investing a good amount, they desire their representation on the board of directors of the manager or the investment manager who is ultimately managing the ReIT and InvIT. Such a representation basically aids them to monitor their investment, aids them in decision making. So we considered this request and we brought an amendment in 2023 facilitating this request. So now it says that a unit holder who has at least either individually or collectively 10% of the total outstanding units of the ReIT and InvIT, it can nominate a director on the board of directors of the manager or investment manager. So it is basically a protective right which aids in decision making and monitoring of investment by the institutional investors, primarily because they are the ones who invest major amounts.
Got your point, sir. Thank you for the explanation. Now, the consultation paper also mentions the representation by market participants on the restriction placed on the nomination of directors. What is the clarity that the market participants seek?
Yeah, so like currently the circular provides that the board nomination rights is to one or more directors of the investment manager in the cap. So if he has that board nomination right in the capacity of in any other capacity, let's suppose as a shareholder of the manager, since investment manager is also a private limited company or a limited company, as a shareholder of that manager also they will have one director appointment. So if a unit holder is also a shareholder or is also in any other capacity as a lending institution has a power to nominate on the board of directors, we said that those unit holder will not be allowed to have those rights because the nomination is required to have one director as a representative in the board. Since you already have it, you need not have this director as a unit holder. Why do you want to nominate? Because it's not like controlling the board of an investment manager. It's a protective right and which should ensure that your representative is present in the board of directors. So with that thing in our mind, we had raised this restriction that in any other capacity, if you already have a director on the board of the investment manager sitting there, you cannot exercise this. So you can have only one director nominated. You can't have like 10%. I'm holding 4 units, 40% unit, and then as a shareholder, I'll appoint 10 directors in the board of investment manager. So that was the restriction placed in the circular issued.
And then the clarity is this what is?
Then the clarity which they are thinking now, asking the market participant is that in the DT debenture trustee regulation, there is a contingent right available to a debenture holder, debenture security holder, wherein they say that if there is default in the creation of security, or if there are 2 consecutive default in the payment of interest, or if there is default in creation of security, the debenture trustee can appoint a nominee director on the board of the investment manager. Now, the peculiar concern came out is that if a single person who is also a unit holder and also a debenture holder, since this right avails when there is a default, actually, he should not be restricted to appoint a nominee director as of now. So this was a clarity required by the market that since this being a contingent right, which will be exercisable as of foreseeable in future, where the actually default might not happen, will not happen, nobody knows. So this restriction should not be placed in that type of circumstances is what market has.
Great, sir. Thank you. And having said that, what do you think was the rationale behind this restriction in the first place?
So as highlighted earlier also, see, this right is not meant to give anyone control over the board of directors of the manager or investment manager. It is just that I'm holding a certain percentage, 10% and more, so I can have a representative on the board. What will that representative be doing basically? It will be facilitating me in taking decisions because I have a representative. It will aid me in monitoring my investment in a better manner. And it is a protective right. So we don't intend to give control to anyone. So that was the rationale behind this restriction, that if you have this right in any other capacity to nominate a director on the board, then you will not be entitled to nominate a unit holder nominee director, because we don't want a single person nominating, 3-4 directors. It serves no purpose. So unit holder nominee director, you can nominate if you hold 10% and above, but you cannot exercise this right if you already have the right to nominate a director in some other capacity. Some other capacity can be, you may be a shareholder in the manager, so you may have a right in that capacity. You may be a lender to the REIT, to the holdco of the REIT, to the SPVs of the REIT. You may have a right in that capacity. So if you have that right in other capacities, unit holder nominee director right will not be applicable. So that was the rationale behind, placing this restriction.
That gives us a lot of clarity, sir. So coming to our next question, how is the role of unit holder nominee director different from other directors of the ReITs and InvITs?
Yeah, so mostly if we see, like, executive directors are involved into day-to-day functioning of the any company, so to say, or in this case, the management of the assets of the REIT or InvIT. Unit holder nominee directors are appointed by those unit holder to safeguard their interest but after all, they are a director. So all directors are equal. The companies doesn't distinguish which director or what director. They have a fiduciary responsibility to manage the assets and for betterment of the InvIT or REIT as a whole, for the betterment of all the unit holders. So it's not a single unit holder's decision. Anyway, he will be an interested person if it is affecting or it's related to that particular unit holder whom he is nominating. So overall, to say, all directors are same, equal, and as a fiduciary responsibility, they have to manage the business of REIT InvIT in such a manner to overall benefit the REIT and the unit holder.
Thank you, sir. That's very relevant. And having said that, could you also explain that why is it important that these directors of the ReITs and InvITs, they must be able to act independently of the investment manager?
Yeah, so first of all, to clarify, there is no directors of REIT InvIT, because REIT InvIT, it's as such is a trust. There are directors of the investment manager. So now how do we ensure that they will act independent? Is that the fees of an investment manager is linked to the total revenue generated by the REIT InvIT or the net distributable cash flow that is given it to the unit holder. So mostly we presume that the unit investment manager or its director will act in the betterment of the REIT InvIT as such as a whole, to which its fees is linked into. It's not that separately they'll get something. It's totally linked to the benefit accrued to the unit holders as such. So their conflict is linked in that way.
Thank you, sir. That's very relevant. And having said that, do you feel that unit holder nominee directors could at some point assume the role that independent directors play for ensuring a robust corporate governance framework?
So while mandating this 10% unit holder to nominate our directors on the board of investment manager, SEBI also mandated that stewardship code to any unit holder holding not less than 10% on the total outstanding. So those stewardship codes are also applicable to the unit holders as such holding more than 10%, so that they should act in the betterment of InvIT as such. They should have a policy on voting. They should have good decision making. They should contribute to the betterment of the investment REIT InvIT as such. And they are required to anyway exercise these duties with diligence, due and reasonable care and skill, and with an independent judgment. We feel that such directors should actively play an independent role for robust governments and enhancing the betterment of the overall industry as such as a whole.
Thank you so much, sir. That gives us a lot of clarity. Now, coming to this amendment to the Master Circular, what do you feel is the rationale for the insertion of the amendment, and how could it allay the concerns of the unit holders?
Okay, so right now, how the provisions state in the circular is basically a unit holder holding 10% or more can appoint a nominee director on the board of the manager. Okay, but this right is not available if the right to nominate a director is available to the unit holder in some other capacity. This is one thing which circular says. As per SEBI debenture trustee regulations, a debenture trustee has a right to appoint a nominee director on the board of the issuer in consultation with the debenture holders in certain cases of defaults, which we explained earlier, like if there is a default in the creation of security, if there are 2 consecutive defaults in the payment of interest, or if there is a default in the repayment of the redemption amount, then nominee director appointment right is vested in the debenture trustee. So now a confusion arose that right under the DT regulations, if it is exercisable, see that right is contingent right. A default may or may not happen. But the right to appoint a nominee director, unit holder nominee director, is an absolute right, which gets vested with a unit holder once he meets the 10% threshold of unit holding. So the confusion that arose is whether that DT wala right will be available to a unit holder or not, because of the restriction which the circular says. So now we are bringing out an amendment in the circular provisions, which specifically states that if the right to appoint a director is available to a DT as per the DT regulations, then the right to appoint the unit holder nominee director will also be available. So both rights can coexist. This is the clarity that we are seeking to provide by way of this amendment.
So we are inserting a proviso to the restriction already placed in the circular which we had issued.
Got your point, sir. That explains it very well. And we shall not delve deeper into it for the sake of fairness and transparency. So the competent boards, I feel, should not be propelled by the same risk-taking incentives as top management. And it is very important to monitor the aggregate financial exposures and warn firms taking too much risk. We must now thank Mr. Pavan and Barun for taking out time for being a part of this discussion, clarifying the scope of this consultation paper. This is reflective of SEBI's proactive stance as a regulator for ensuring a robust consultation process in the interest of transparency, investor protection, and promotion of orderly markets. When there's a measure of public oversight over supervision, regulations are transparently enforced and enjoy stakeholder confidence, even in the times of great optimism. We look forward to more such discussions. Thank you for your time.
Thank you. It's good to know and explain the rationale, because sometimes it's like written something and then when we explain it, the logic comes out very clearly when the things are explained in a video call or something one-to-one when we discuss things. Thank you.
Absolutely, sir. That was the whole purpose of the discussion, and we look forward to having you again for further such discussions. Thank you.
Sure.
Thank you, Antra.